We're tracking Ford here this morning. Ford riding high off of its fourth quarter earnings beat. Shares up a little more than 2.5%. The company projecting a full year profit outlook that beat estimates here. One blip. The automaker still sees more losses in its EV units amid an industry-wide slowdown in demand. Consumers still aren't sold on vehicle pricing, lack of charging stations, and battery range. Ford CEO Jim Farley spoke about the company's EV investments, touting an internal team that's working on making a low-cost EV to compete with Tesla and Chinese OEMs. For more on this, we turn to Tom Narayan, who is the RBC Capital Markets lead equity analyst for global autos. Also with us, we've got Michelle Krebs, who is the Cox Automotive executive analyst. Michelle, I'll begin with you because as we think about this broader kind of landscape for many of the auto manufacturers, especially the big three here in the U.S. that have had to look across their own ambitions for EV saturation and had to pull back on that just a little bit, where does that then shift some of the focus in this near term from your perspective?
Well, we've said that the focus, the forecast now is gone from rosy to realistic. I think what has happened is everybody's on the EV train, and but not all consumers are, and so we're seeing a lot of new models, a lot of production of EVs, but the demand is not there. That's not to say that EVs aren't still increasing in sales. We anticipate they'll have another record year this year as they had last year, but it is forcing automakers to look at what is their timeline in terms of rolling out new EVs and how they're going to spend their money.
Tom, when you take into account what we did hear about the EV strategy, the shift that we have seen play out of Ford, comparing that to the rivals and the other automakers that I know you cover very closely, how does Ford stack up to some of its largest competitors?
Yeah, and I think we learned that from the call yesterday. I think Ford intentionally went headstrong into they were an early adopter of EVs, and I think it's kind of hurting them right now, to be honest. Take a look at Stellantis in the D3. They were kind of later to the game, and it's kind of benefiting them. Ford really has no choice but to really commit. That said, at the end of the day, this is an evolution. We are moving towards electrification. So these bets will eventually pay off. It's just that right now, and we heard this from the Tesla call as well, we're in between two waves, and it could be a little challenging for some time.
And so how do you price that into the valuation from your perspective, Tom?
Yeah, so, I look at the guidance that they gave, 10 to 12 billion of EBIT, and my EBIT actually didn't change all that much. It stayed at around 10 billion of EBIT. And the reason is I do think these EV losses that they're calling for, if you annualize the Q4 losses, you get something like negative 6.3 billion, and they're calling for 5 to 5.5 billion. So, I think that could be a challenge for them. So I'm calling from the low end of their guidance range. And then I do a sum of the parts valuation, and I come out to a $12 per share valuation. That isn't to say that, the pro business they have is amazing. It's one of the best businesses in autos. It's just that EV drag is just really painful for these guys. It's half of their entire EBIT is coming from that. And we just don't have the evidence yet that that's going to turn around next year, even though, they say it will.
Michelle, we've seen the price wars play out. Obviously, it has been a challenge, a headwind here for so many of these automakers. When you take into account, Michelle, what we heard from Jim Farley last night, also the fact that Ford now seems to be focused on this cheaper EV, do you think we're going to see continuation of these price wars, given the fact that consumers are very much still under pressure?
Absolutely, especially in the EV segment. We have double the inventory of EVs that we have of regular gas power or total vehicles. And so that means there will be more incentives, there will be more discounts, there will be more price cuts. So it's going to be a very cutthroat business in the next year or two.
And with that in mind, what do consumers need to see from what you're hearing on the Cox Automotive side in the broader infrastructure for electric vehicles to feel comfortable buying into them, to get to some of the targets that Tom was just talking about these automotive manufacturers have laid out?
Well, first of all, price. That's always been the number one barrier for EV adoption, especially as we move into the more mainstream buyers. So far, a lot of the EV buyers have been very affluent. They're They probably have multiple vehicles in the household, but now we're moving into that heart of the market, and that's going to be a bit of a tougher sell. So price is one, but the EV charging infrastructure, it needs to be more expansive, but it also needs to be maintained, because we have seen just horror stories of, there was one in Chicago during the storm of, people waiting for chargers. They drive up to one and it's not working. So that's got to be worked out as well.
Just lastly, would love to get an answer from both of you on this. When you think about the interest rate environment and how much consumer sentiment is tied up within that, especially for financing large purchases like automobiles, if we do see cuts and the pace of cuts perhaps that were anticipated by some consumers and economists out there for this year, what will that do in terms of perhaps a dam-breaking type of moment for people getting back into purchasing in the automotive market? And Michelle, I'll go to you first, and then Tom, would love to get your thoughts.
It certainly will be a huge help. High interest rates have pushed a lot of people out of the market, have pushed the monthly payment really high to the point that some people just walk away. So that will be a huge benefit. I would say the number one thing for consumer sentiment, though, is gas prices. If you watch gas prices, that's where consumer sentiment goes. But interest rates are not far behind.
Fair point. Tom?
Yeah, I totally agree with that. The interest rate environment is what Elon called out every one of his earnings calls, right? It totally impacts affordability. What we're noticing, though, is that the pricing is at all-time highs. So the concern would be is if affordability is in question, if pricing collapses, that is really problematic for these OEMs. So if interest rates do come down, affordability is maintained, they could have another record year of profit. So it is of tantamount importance. It's also important for the EV story, as we talked about earlier. Pricing, I think, after charging infrastructure is the number one problem people have with EVs. Those prices need to come down.
Tom, Narayan, Michelle, Krebs, always great to get your insight. Thanks so much for joining us here today.
Thank you.